Relief for indebted households and business as the Reserve Bank slashes interest rates for the first time in 4 years. The Reserve Bank announced earlier yesterday that interest rates had been cut by 1/4 percentage point, taking the repo rate to 8% and the prime rate to 11.5%. Analysts believe this is the beginning of a rate cutting cycle, which will make the cost of debt slightly cheaper. All right, so unfortunately, we've lost that clip. We're going to continue. So, of course, yesterday, the Reserve Bank announced that interest rates have been cut by 25 basis points. For more on this, I'm joined by SABC News Specialist Researcher Velemseni Mthiyane. He's going to break down what it means for us. A very good afternoon, Veli. Thank you for joining us.
Yes, good afternoon to you, Nompo,
good afternoon.
And the viewers.
So, of course, you compiled a number of slides just to look at the impact in terms of bond repayments and so on. Just take us through it.
Well, Nompo, we know where we are coming from with the issue of high interest rates, which began in November 2021. And people who had bought properties, houses at that time, they had thought it's a bargain. But few months down the line, about 14 months, and then something happened. And then the interest rates, they rose with about 475 basis. So let's look at the slide. Basically, let's start with, go a little bit back. In July 2020, you know that the inflation, it was during lockdown, the inflation was at 3.2% all the way, if you look in August, in July 2022 at 7.3%, and that's high. Remember that the Reserve Bank is always targeting within 6%, and of course, targeting the midpoint there, which is 4.5%. But currently, we know that we are sitting at 4.4%. So there was hope that since in the past 15 months or so, the interest rates have been within 6%, not necessarily within the midpoint.
Mean the inflation?
The inflation, within the midpoint of their inflation target. But when we look at what the Reserve Bank Governor, Lesetja Kganyago, announced yesterday, 25 basis points was expected, but there were some conversations that said that with the USA cutting the interest rate with about 50 basis points, they were hoping that perhaps would follow the same suit. So if we move into the next slide, then we will see what actually happened with the issue. So now, if you look at Nompo, it was November 2021. The repo rate was at 3.5%. And then during that period between November 2021 all the way to May 2023, 475 basis points were added. What does that mean to those who were paying debts? It meant that they had no room to breathe. A lot of money had to go out to service that kind of debt. So now we know that 475 basis points is actually 4.75% of what, that's massive.
It's huge.
Yeah, it's huge. Now, in the next slide, what we are going to see, what the impact that we talk about, that we are having. Now, if you were, by July 2020, the bond that you were paying, if you were having it at a prime lending rate, which was 7% at that time, you were paying a bond over a 20-year period, you were paying something like 7,752 rand for a 1 million rand bond. Now, fast forward 14 months later, you were sitting at about 11.75% prime lending rate. That's 10,837 repayment.
Ouch.
If you were given at a prime lending rate, Nompo. So the difference between these two is a whopping 3,000 rand, just above 3,000 rands, that those who are having these bonds or any other debt related to this that they were paying over and above what they had expected. Remember, they had gotten it at around about 7%, and then fast forward few months, just over a year, they were paying 3,000 extra, which is almost 50% of what they were paying at that time. That's massive. So now, in the next slide, we're going to see some good news. It's some good news. It's welcomed. Others are saying it's little, but well, it's good because it puts some rands and cents in the consumer's pockets. So here, if we look at it, so now with the 25 basis points cut, now we know that there is a change of about 173 rands if you are paying a 1 million rand bond over a 20-year period and you are given it at a prime lending rate. So 173 rands, Nompo, is about 10 loaves of bread. So the announcement yesterday was good. It has put about 10 loaves of bread into consumers' kitchens or wherever they prepare
Yeah.
their bread. So it's good news. But had it been that a 50 basis point was given, we look at the repayment, we're going to move from 10,837 if the prime lending rate was at 11.75. If they cut by 50 basis points, that's what the consumers were going to save, 345 rand. That's about 20 loaves of bread.
And hopefully that's coming in November, hopefully.
Hopefully another 25 basis points, but judging by what the Reserve Bank governor said, he's a very calculative man. He says the risk, talk about all sorts of factors, but they are very much on the line that we may see another 25 basis points cut. So now, if we look into the last slide, the graphic that we are going to have, we will see that Nompu, it's benefiting the consumers now that they have held up all this much, but now they start to see the relief, and the relief comes at a good time. Because if you consider that if you are having a loan for the car, then you're going to get some cut there.
Unfortunately, we don't have that slide, but it's fine. You can speak to it.
So you can have a cut for the car if you're having a car payment. And also, if you look in terms of the other factors like fuel, and it has been going down. So if you put all those savings from fuel and the petrol prices going down, and then you look at the interest rates now coming down, and hopefully by November there will be another cut. So you would see that by the time the consumers, they go to December, they would be very much smiling, looking at their pockets.
Yes, and on top of that, some people are going to tap onto their two-pot savings.
Hopefully not.
Thank you very much for the good news. Of course, 25 basis points, not a lot in the scheme of things, but as my colleague Veli says, that's 10 loaves of bread. And if we continue to experience further rate cuts, it could be quite material as we go into 2025. And so we continue.